Yeah, do you like the numbers? I told you, macroeconomy, right? What are you looking at? Today is going to be an interesting video, guys. It's it's going to be an interesting video because, again, I will keep repeating it and nobody's still not paying attention. And it looks like this lady watched my video somehow, because what I told you guys a couple of days ago, that is what she explained in her yesterday's video. But I think, like, maybe me playing that video to you guys, you will understand better. They are not going to print money. They will take your money if needs to, because printing more money devaluates the dollar even more. They will take your money. I mean, anyways, yeah, you're about to find out. But anyways, what's up, guys? Welcome back to my channel. Before we proceed, please understand that this, my friends, is not financial advice. You are more than free to do whatever you like with your money. And so am I. And that being said, let's grab a sip of coffee from my Kaspa Maxi mug. Yeah, everything, guys, definitely everything tastes better with Kaspa. Today we're about to do the same thing with Are we in Rec City yet? I told you, pay attention to the macroeconomy. How do you like me now? Money is gonna trickle down. In one sense, you are right. Money is gonna trickle down from whatever it is to the King Kaspa, and you will see. Okay. After that, guys, we're gonna look at prices in details, and after that, my friends, we will check on our positions. Are we buying Lambos yet? Oh my God! But before that, okay, today I have something a little bit different. I told you, as an artist, you need to be able to work with whatever you are given. Okay, I am an artist. I compose, I write for me, for myself, or for my people on my roster, because I'm the CEO of my own record label. So yeah, today I have a Nigerian guy I want to sign, but I just can't sign them just like that. I need to see what they can do. So I have an Afrobeat. You guys know Afrobeat is already taking over, right? I have an Afrobeat which I composed the song. Okay, I'm only gonna play like the hook and the bridge to you guys. Okay, it's like I said, I'm good at writing about emotions. Okay, it just reminded me the first time I met my girl. So I wrote the hook and the bridge is like that. Since, again, I'm Cameroonian, okay? My father is Cameroonian, you guys already know. My mother from Equatorial Guinea, and I grew up in Nigeria. So I'm going to mix two languages together. I'm going to mix French and Igbo. So Igbo is the native language where I grew up in Nigeria. Talking about, when you go this way, like, hey, the lady that has my heart. And then you answer that in French, ma chérie, bébé oh. Then you add the broken English. The way you move, you make me the one no colo. So it's gonna be like that. So yeah, let me just play it to you, okay? I know it's gonna sound crazy, but hey, give me a second. Let me play that for you right quick.
Mon chéri, bébé, oh. The way you move, you make me the one no colo. Mon bébé, mon chéri, bébé, oh. The way you move, you make me the one no colo. Mon chéri, bébé, oh. The way you move, you make me the one no colo. Mon bébé, mon chéri, bébé, oh. The way you move, you make me the one no colo. chéri, bébé, oh. The way you dey move, you dey make me dey wanna follow. Mon bébé, mon chéri, bébé, oh. The way you dey move, you dey make me dey wanna follow. Mon chéri, bébé, oh. The way you dey move, you dey make me dey wanna follow. Mon bébé, mon chéri, bébé, oh. The way you dey move, you dey make me dey wanna follow.
Yeah, that's the groove of it. Okay, once we're done with it, it's gonna be part of emotions. But though I don't think I'm supposed to mix Afrobeat with the other kind of genders. But anyways, it's something that we're gonna do. Regardless, anyways, let's go back to business. It's just I just got carried away right there. You know, when you do something that you love to do. For me, singing is one of the things that really makes me relax. But well, let's go back to what we are talking about today. First, I told you, pay attention to rate cards. Rate cards are not what you think they are going to be. People are painting them to be something that they are not. And I have tried so many times here to prove it to you. Okay, I've been trying to show you so many times, guys, because again, the US dollar is already inflation. I mean, they've been kicking that can down the street that you can't kick it anymore. Okay, we don't know exactly when it's going to kick in. I told you that even like the other day when I was showing you something, that first go look at trying to get the credits. If you look at 2001 and you look at 2025, that thing is very similar. Very similar. I know a lot of you are going to say, yeah, 2001, but it happened in 2008, 8 years later. But one thing you are missing is the economic situation back in 2001 and the one we are right now. Economic situation back in 2001, the dollar was not hanging by the thread. The dollar was not overprinted. Okay, and for sure there were some people who were trying to kick the dollar out, but there were not so many. Right now, economic powers of the world, they're kind of bonding together, trying to do real damage to the US economy. Okay, so that's the difference that is happening now. And now, if we go back to why I'm telling you, another reason again, why I'm telling you that rate cards are not what you think. Just last year, you know, like we have the bail-ins and we have the bailouts, right? Those of you who look at economy, bail-ins and bailouts are bailouts when the government comes and prints money and bails the banks out, right? That's something that we already know it happens. That's why you see so many inflation in the US dollar value. But last year they did it. They went to a bank, closed the bank down, and took your money, okay, to fix their own mistakes. And that is something that the more I look at it, I think is going to happen. That banks in the whole United States, instead of printing money, they are going to take Americans' money to try to fix the mistakes that they are having right now with this inflation. You already seen it in a lot of countries in Europe. A lot of countries in Europe have already done the same thing, because everybody has figured out you can't keep printing your money. If you print, you are devaluating much more. Countries like the United States, we do not produce anything. I told you this is the reason why. This is the reason why our good friend Trumpicius Magicius, he is trying to take his wand to try to look at tariffs and go agalakazam, ping pong, la foo. He's trying to go that way. A lot of Americans don't understand it now. They don't. But Trump is actually trying to fix the economy, because people know, like right now, you can't, like I said, you can't print. You can only try to find a way to produce. And now, if you put tariffs is not on the countries that are trying to sell. Tariffs is on Americans. Okay, Americans have to, let's say I have my Maxi mug and you have whatever else. My Maxi mug is American, you don't like it. Okay, that's great. You rather go have your Solana mug. But guess what? As Trumpicius will say it, Solana mug is gonna cost you 50% more, and Maxi mug is still cheaper. So yeah, it's up to you, either to drink from my Maxi mug or go and get you a Solana mug. It's up to you. And what that will lead to is for Americans to get up their sorry asses, their lazy asses, get up and start producing. If we produce, and then now we export to China, whatever, it's up to the Chinese to say, you know what, I like the American, I like the Maxi mug better than the Cardano mug, the raccoon mug. Okay, it is 50% more, I don't care, I'm gonna buy it. It's up to them. The Indians, the Japanese, whatever that we are trading, exporting to, it's up to them. So right now, Americans, we are so used to getting everything done for people, by people, for us, that it is very hard. People look at the way it is going to happen and they begin to cry. You forget something. To build a better economy, you have to crash it first. Unfortunately, that's what it is. Every time you've seen transitions of economies, that's what has always happened. But right now, everybody is hanging on this hope, false hope about printing more money and this and that is going to happen. It's not, my friends. They've already tried it. They did it a couple years ago. They did it last year, taking people's money, as you are about to see right now. And unfortunately, it is the law. It's a law that the government can use, okay? And it's exactly what's about to happen. So, again, that before we get to that video, there is something else that caught my attention. Did you see a Bitcoin charts in 2012? Go look at Bitcoin chart in 2012. Put it side by side with Kaspa's chart. Man, it gives me goosebumps every time I saw it. Somebody did it, and look, I reposted it on my X account. What is my X? My Twitter account. I did reposted it, and it gives me the chills every time you look at it, okay? Excuse me. I'll go here. It gives me the chills, seriously. Yeah, let's go here. See, this is something that really, I don't know. If this does not give you goosebumps, I don't understand what else will. The green line is Kaspa, okay? The orange one is Bitcoin. You put them side by sides, my friends. Look at this. Amen. You see this? I see this, and I keep telling you, generational wealth is going to be on Kaspa. And even though, sorry about that. Even though people, when you look at price right now, and it does not make sense to you, just sometimes go back, and they usually say it. History does not repeat, but it rhymes. Look at this chart, my friends. You look at this chart. This is your mighty Bitcoin. Look at it again, and look at Kaspa. What do you see? Amen. It is so crazy how they are so much similar that it gives me goosebumps. It makes me so happy to see that Kaspa is following right into these footsteps. Okay, these footsteps, like I keep telling you guys, money is to be made in this thing. Short term, you're gonna make a lot. Like today, I will say it again. PPI came out today. What is Kaspa doing? It's coming. It's going to happen before you even know it. And imagine when everything starts running nice and smoothly on Kaspa. That is when multi-millionaires, if not billionaires, will be made. Because Kaspa's emission is faster than Bitcoin. Soon you will start hearing about staking, or provide this for that, do this for that. And the funniest thing, when the VProg program on the native Kaspa go live, this is going to be like, I don't know, Bitcoin tried it, okay? You remember the Bitcoin ordinals on whatever nonsense they tried to do? It didn't work. When Kaspa comes out with it, ooh la la. Ooh la la. But anyway, it's something I wanted to get off my chest, because when I found out about it, and I thought this should be something that you should look. Again, that's another step closer to telling you generational wealth is on Kaspa. And you will see, okay? Anyways, let's go back to what we are talking about. You remember, like I said, rate cuts are not what you think. They are not going to print money as a lot of people are trying to sell it. They are not going to print. It's not. yeah, maybe 10% or whatever. Things are going to happen so fast that the people are not going to understand. Yeah, it was 2001, and now this one is 2000, and the effect was shown back in 2008. Again, look at the situations. The same thing that was back on 2001 is not the same like it's in 2025. Even the amount of debt that the US had in 2001 is not the same amount of debt that we have right now. If they can print money, they are going to take your money to fix their problem. This lady, like I said, I think she watched my video and then she made one out of it, because I do remember telling you guys about this stuff like what, 2 weeks ago or something like that. I think she explained it. Let's watch her. Okay, let's watch her videos. Okay, let's see right quick. Let me show you. Where's here?
Are hanging on by a thread. The Federal Reserve's desperate attempt to shrink its balance sheet, combined with the Treasury's flood of short-term debt, has pushed an already fragile system to the brink. These banks that already have razor-thin, if any, reserves are now just one shock away from total collapse.
You see? That's what I've been telling you. If they were about to print, why haven't they done it? Are they going to let the banks really totally collapse? No, they are not going to do that. And they cannot even print. They are going to take your money. That's you just watch and see.
When that collapse comes, it won't just mean another 2008 style bailout. It could also mean bank bail-ins, where depositors like you and I are forced to save the system with our own savings against our will. But this isn't just a hypothetical. Other countries facing similar threats have already enacted these bail-ins, and the legal framework is already in place here today in the United States. All it takes is one weak link. And today, that weak link that could set off the chain reaction is commercial real estate. For the last few years, many experts and analysts...
This is one part in which I kind of disagree with her. It's not just commercial real estate. It's real estate in global. Personal houses, strip malls, whatever you want to call it. Real estate in general. Because as we already seen, the job market has fallen. The light on those numbers. I'm pretty sure you guys already know that the light on those numbers is not 70,000 jobs. They do not. The US have lost over 1 million jobs. So yeah, it is tightening and tightening and tightening. But let's listen to her opinion on real estate, which again, I agree with it, but not totally. It's not just the commercial real estate. It's real estate in global, all of it together.
Have been warning about a commercial real estate crisis, one that is lurking in the shadows ready to rear its head, which makes sense given the amount of empty buildings we have. Let me ask you, how many of you have driven around, looking at the empty office buildings, the vacant strip malls, apartment buildings not in use, and wondered who is on the hook for all of these properties and how has a crash not happened yet?
Now, if you ask me, I think for the commercial real estate, most of it is to be blamed on the AI and robotics, because for many people it's cheaper, for many companies it's cheaper to have an AI or robots do your job, okay, versus hiring people, which is another thing that I think the US government is going to regulate here very soon. You're about to see it happen, okay? But anyways, let's keep on going.
Is that once again banks were bailed out, only this time it was done quietly. See, after 2008, the Fed realized that big public bank bailouts aren't popular, so what did they do? They got craftier, sneakier. And instead of firing up the old printing press, no, they created crisis management tools, which I will explain in a minute.
See, like I'm telling you, instead of printing money, they created crisis management tool, which means your money is going to be used instead of printing. So everything we are watching right now in this 2025, as things progress along, that is what it looks like. If they did it, okay, watch it just happened last year. They did it. Okay, let's keep on watching.
Still keep the system running without raising alarm bells for the public. But make no mistake, it still directly will impact your wallet and your financial future. Despite the lack of mainstream media coverage on the topic, the commercial real estate crisis has only grown under the surface. Right now, somewhere between $1 to $1.3 trillion worth of commercial real estate loans are set to come due this year. Loans that were financed at rock bottom rates. Rates that no longer exist, even with potential rate cuts. These borrowers came in at 2 or 3%, and now they are facing refinancing at double, triple what they were.
You see, that's what I'm telling you. The banks are not giving the loans. You print money. Who is going to absorb that money? Internationally, that road is blocked because most of the economists, they are okay, you're about to watch. I'm telling you, they're going to cut rates. Yeah, everybody and their grandmama is going to FOMO in, thinking, oh yeah, they're about to print money and we're about to do this and that. That is not the way. In my humble opinion, I don't think it's going to happen that way. Okay, a lot of people are going to get left holding the hot potato. Well, let's keep on watching, please.
Signed up for, they cannot afford it. The math does not work up, especially given that at the same time those office buildings continue to lay vacant, businesses are cutting costs, and brick and mortar demand continues to decline. All of which is evident in the delinquencies on office and multifamily loans. Delinquency rates that are now higher than the 2008 Great Financial Crisis. In fact, office delinquency rates alone have peaked at 11.7% as of this month. Not only is that the highest number on record, but the trajectory shows us delinquencies are only going to continue to rise. But not only that, these numbers don't even tell us the full story, because likely they are far worse thanks to one of Wall Street's favorite tools, the extend and pretend payment method, which really should be called delay and pray, because extending payments does not do anything other than buy time, and nothing is changing with that time. You and I both know there's no magic.
You see, that's what I'm saying. All they keep doing is kicking the can down the road. Extend it. But right now we are at the point that you can't kick it anymore. You can't extend it anymore. Now we have the US dollar, you losing the purchasing power everywhere, domestically or internationally. It's losing it. And they can't print to devaluate even more. They can't do that unless they have a counter about it, which means people would have absorbed whatever that they print. But right now, like I said, well, you're about to find out. You're about to find out. Okay, let's keep on watching, please.
That is suddenly going to create demand for these buildings. That's not happening, no. So all it's doing is making things appear more stable on paper, when in reality, the problems are only compounding beneath the surface. So when it finally breaks, the fallout will be that much worse than if they had just tackled it head on at the time. And as I mentioned earlier, that time could be sooner than we expected, thanks to the Fed's desperate moves. Remember when I mentioned earlier that the Fed has a series of crisis tools that they use that are really just backdoor lifelines for banks to keep the illusion intact? An example of this would be the Bank Term Funding Program, which they had for a while, which allowed banks to essentially borrow against assets on paper value, even though the real value of that asset was worth, let's say, pennies on the dollar. Well, another one of these tools is the reverse repo facility, which right now is flashing red. I have talked about the reverse repo facility extensively over the last year because I believe it is giving us one of the clearest warning signals yet of the crisis to come. Yet, it's funny because I would say that most Americans have never even heard of it by design. Here's how it works. Hedge funds and money market funds park their cash there overnight. The Fed pays them interest, and it keeps liquidity in the system, kind of like a hidden buffer. This is important because liquidity makes sure that the wheels are greased in our machine, that everything keeps running, right? If liquidity dries up, like it did in 2019, well, that's when repo rates exploded overnight and suddenly everyone starts panicking. But on the flip side, too much liquidity, too much money sloshing around in the system, and we get increased inflation, which is why after the avalanche of debt in 2020 and 2021, the Fed leaned on two levers they have. They rose the rate significantly and they started reducing their balance sheet or reducing the...
You see, that is exactly what needs to happen. Not cut rates. They need to keep the rates higher because right now there is too much US dollars on the street and the inflation, the purchasing power, just like I just said, is just too much. yeah, the illusion is going to get created. Like we got an interest rate, but once they see the effect, once the Fed see the effect of what they're about to create, yeah, yeah. So yeah, let's keep on watching, please.
In the system. But while this might have slowed the rate of inflation from, let's say, 9% to 3%, I use the word slow,
back up a little bit.
And we get increased inflation, which is why after the avalanche of debt in 2020 and 2021, the Fed leaned on two levers they have. They rose the rate significantly and they started reducing their balance sheet or reducing the liquidity in the system. But while this might have slowed the rate of inflation from, let's say, 9% to 3%, I use the word slowed very intentionally because remember, inflation has not gone away. It is just going up at a slower pace than it was a couple of years ago. If you ask me, as a sound money advocate, we don't need inflation at all if we have the gold standard, but that is another video for another day. So it might have slowed the rate at which inflation is going up, but it is now creating other problems, essentially a massive bank stress test. Now stay with me on this because I'm going to tie it all back together. At its peak, the reverse repo facility had over $2.5 trillion. As the Fed has been tightening, that has now gone down to near zero. But what I do not think the Fed was anticipating is the Treasury issuing record amounts of short-term debt. As the demand for U.S. debt has declined, we are having to get more creative with our buyers. So the Treasury...
There you have it. As they decline, the US debt declining is not because they want to, it's because internationally people are ditching the US dollar. People are no longer buying US debt. This is this is exactly what you have to see. Therefore, our good friend Trumpicius Magicius, one way out is creating tariffs. Tariffs for whatever that is getting sold in the United States soil. That to stimulate Americans to get up and start producing and create jobs and create more tax revenues and create. There's a lot going on that camp. But hey, a lot of you will find out very soon that later. And this is why I always said, hey, Bitcoin is not your safe haven. Gold is your safe haven. I've always said it here before. Store of value is gold, not Bitcoin. But oh well, you will figure that one out in a moment, okay? Let's continue watching.
Has been issuing hundreds of billions of dollars worth of short-term debt. Debt that pays better than parking your cash in the repo facility. So the money market funds are now pouring into this U.S. short-term debt, and as a result, the facility has tightened and shrank to near zero, meaning that liquidity buffer that banks were counting on, relying on, is now basically all dried up. But I know someone out there is going to go, wait a second, pause. This facility wasn't always here. Is drying up this facility really such a bad thing? Doesn't that mean we're going back to the way things were? And in some ways, you're right, but the difference is so much has changed in our system. Not only the exorbitant debt, not only the lack of interest of buyers for our debt, but now we do have other crises brewing. It's a game of whack-a-mole. So with commercial real estate in particular, you need this buffer of liquidity because as things tighten, as lending tightens, and there's less backdoor tools for these banks to rely on, then the crisis that's been there all along that we've been papering over suddenly becomes very real very quickly. But it's not just big banks that are at risk of this. Within the banking sector, the majority of these commercial real estate loans are actually held by community or regional banks, meaning the risk is widespread. But it doesn't just stop there. Now, this is almost comical to me if it wasn't so serious, but guess where over half of the multifamily loans are held through? Fannie Mae and Freddie Mac, two of our best friends from 2008. And guess what? That is essentially government exposure to this crisis exposure that is...
See? Now those bad dreams from 2008, they have begun to raise their ugly heads. And and yet people are not seeing it because the mainstream media, all they are doing is try to cover it with rate cuts and kumbayas and blah, blah, blah. Just like they just did a couple days ago about unemployment. 70,000 to 12. No. It was 1 million jobs that were supposed to be created. But they only did 12,000. Things are beginning to unravel. And yet, once they cut rates, everybody and their grandmama singing Kumbaya. That is when they usually do the mic drop on you and hand you the hot potato. Okay, let's keep on going, please.
Than doubled in the last few years. So if the government were to make sure that this crisis continues to be kept under wraps, it is going to be a quiet, stealth bailout, one that the taxpayers will pay for, one that the value of our dollars are ultimately going to pay for, meaning that we will continue to lose the value of each and every single dollar we own. A bailout in disguise is still a bailout, but it is not just a bailout, unfortunately, that we have to worry about. Bail-ins, something that I know keep many of you up at night, a serious...
Now, this is what I'm thinking will happen. This is where I agree with her. Bailout is printing money. I don't think they're going to print. I think it's going to be a bail-in. A bail-in where they take your money, my money, okay, or probably put a limit on how much I can withdraw, on how much I can do that, to use that money to fund the state, to fund the government, okay, and then pay you maybe sometime in the future or whatever, however they're going to do it. Like I said, a bunch of countries in Europe have already done this. Those of you in the comments below, you can tell me if I'm right or wrong about this. But bail-ins have happened even last year. Like I said earlier, last year it happened. Okay, let's see if she's going to cover it. Let's go right quick.
For depositors is that when a bank becomes insolvent, who do they turn to fix the crisis? It's not taxpayers. It's not deflating the dollar more than they already have. No, it is the depositors themselves.
This is a team of FDIC agents preparing to seize a bank outside Chicago. They've checked into this hotel under a fictitious name, CB and Associates, to prevent a run on the bank. They don't want anyone to know who they are or why they're here.
You all know that this is for the closing of Heritage Community Bank.
But instead of printing new money, what they're going to do is they're going to turn to you, to your savings, to your checking, to your assets. They're going to take from you to make themselves whole. And before you say, well, they could never do that, that will never happen, it already is legal here in the United States. The FDIC, the people who are supposed to be responsible for keeping your funds safe, have been caught on camera laughing about how the fact the American people don't realize this is legal.
People understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
In fact, a bail-in to small scale has already happened in Oklahoma just last year. And on top of that, we have seen this happen in multiple other countries who have experienced extreme currency devaluation and a sudden shock to the system. All of this happening very quickly with little to no time to prepare.
Now I plan to go to the bank and withdraw all the money I have in there. I can't trust them anymore. It's theft. They're stealing from me.
So whether it's a bailout that destroys the value of your dollars or a bail-in that takes your dollars directly from you, either way, your wealth is used to fix their mistakes. It doesn't matter whether you're the best saver. It doesn't matter whether you're a hard worker. It doesn't matter if you've done everything right. The system will always protect itself over you. That's the hard truth. But what can we do about it? Well, I am all for...
So, yeah, let's go back here. Like I said, a lot of people have it wrong. A lot of people don't realize exactly what's going on. And for you to be able to see all this, you need to be watching the financial sector very, very closely. Very, very closely. Because right now, I don't know, I have sat here and I've said it time after time. It's not what you think. It's not what you think. It's not, the rate cuts are not going to print to oblivion, because if they do, they risk collapsing the US dollar. And that will give more fire to those of them who are pointing a finger at the US dollar, saying like, oh, you see, we told you that right there is not sustainable. And if the US dollar loses that dominance, that is something that, well, you will see. I have been telling you about it. It's not going to be printing. The bail-ins, that is something that is very possible. That's what can happen. They can come in and be like, okay, it might not be a total, like, okay, we hold all your dollars. No, they might put a cap to it. Like, okay, you cannot withdraw more than this amount. And where is the rest going? Why are you telling me not to withdraw more than this amount? See? So they're using that to bail themselves out. Because the less dollars that are in circulation, the higher the Dixie's value is going to go. It's coming. It's something that most people don't see. I told you, once they cut the rates, the market is going to run 4 to 6 weeks maximum, or maybe less. Because right now, like I said, this run is different from the rest of them. It's very different. So if you pay attention to things, yeah, you'll be able to catch it. That's why I said cash is king. Cash is king. You are going to see it. And when people don't see it, the media, what the media is doing is trying to blind you of all the truth about it. The media is trying to make it look like kumbaya, everything is gravy, everything is good, everything, there's no problems at all. But the truth is that, yeah, we are very close. That very close for those bail-ins. Printing, yeah, I'll have to see it. I will have to see it. I don't think the US government is so stupid to print more money to oblivion and give this Russia, China, whoever, the BRICS nation who want to ditch the US dollars, give them that excuse. I don't think they're going to do it that way. But anyways, it's up to you, right? You want to sit there and believe like, yeah, unicorns are going to come tomorrow? Okay, that's up to you. You want to believe that, hey, we are going to go into La La Land and be what you call it, Alice in Wonderland? That's up to you. But I can tell you, this is one of the reasons why our good friend Jeromius Powelsius was our good friend Jeromius Powelsius was like, we can't do that alakazam right now. We can't do it. If you try to do it, there's a lot of, instead of money flowing, we are going to get this big hot potato, and then we have to slice it to all Americans. That's why he's so adamant about cutting rates. You cannot do it. But when they do it, they're going to find another way to fuck you. That's what they're going to do. Don't say I didn't warn you. You heard it here first. But you're talking about crypto. Yeah, market is going to run. It is. I'm telling you, we already seen PPI numbers came out today, right? What did the market do? You're about to see they're going to cut it because, hey, everybody and their grandmama is chasing that green candle. I try to tell you, like, listen, people are front running the market. People selling, okay, drive the buy pressure down, and they're going to buy it at the low as they're trying to do. But as soon as they figure out that the cutting rates is not going to work like everybody and their grandmama had planned, man, that sell-off is going to be epic. It's going to be epic. And those of you thinking that Kaspa, thinking that Bitcoin is going to absorb all the money and then it will go up to $300,000 by the end of the year, you are in for a bigger surprise than you thought. Because Bitcoin is not going to go against the US government. Trust me when I tell you that. We've seen those examples here. Stock market collapse, what happened to Bitcoin? It went down, right? You see, everything is showing, and you're about to see it. So yeah, Bitcoin does not even have no more catalyst that you say, you know what, there is this thing that is going to happen, and then it will push Bitcoin. No, I don't think. Rate cuts are going to happen, and what you're going to see, bam, is going to go up 150, 160,000. Let's first cross that 130, which I think is going to be a major resistance. But hey, that's me. 150, 160,000, and then we are going to see from that. We are going to see how things are going to play from that. Because everybody and their grandmama is going to notice. You are going to notice on your wallet. You're going to notice on when you go to the store, on your bank account. You are going to notice. And then there's no way they can hide it. There's no way. Because now if you try to print, you have the international community like, yeah, let me see you. I double dare you. Do that, please. Give us the reasons to kick you in the nuts. Do it right quick. And I don't think they will. Okay? Anyways, those of you who have ears, listen. If you don't want to listen, don't say I did not warn you. But for me, yeah, I think Kaspa is going to run next year because there is a lot of catalysts for Kaspa. And you guys are going to see. And this happening right now even makes me more bullish on Kaspa, because once the whole market is going down and people realize like, okay, there's this bullish momentum on Kaspa, people are going to want to make money, and a lot of people are going to start flocking into Kaspa. You will see. Okay? Anyways, guys, let's go right quick. Let's look at the market. Let's see how the market has been performing for the past 24. for the past 24 hours. Okay, let's look at our good friend crypto bubbles right there. Let's see what we got going on. As you guys can see, right, PPI came out. You see the market has started to react. Anyways, now let's start first with King Kaspa, KAS. Man, although I wish the prices will stay down, because like, come on, tomorrow is my 2 weeks buying day. Stay down so I can accumulate even more. But anyways, you see, I told you macroeconomy usually go good with Kaspa. See this, for the past hour, Kaspa is up 0.3%, 3.9% up on the day, 2.3% down on the week, 10.8% down on the month, and 48% down on the year, sitting at a market cap of $2.19 billion and a 24 hours volume traded at $33.45 million. See, I told you, pay attention to that volume, and as you can see, it has started to pick up, right? Now, we look at Quant, the banker's coin, and the coin a lot of people love to hate. For the past hour, 0.4% down, 0.6% up on the day, 2.3% down on the week, 12.1% down on the month, and 35.6% up on the year, sitting at a market cap of $1.45 billion and a 24 hours volume traded at $23.55 million. See? It has started to go from 19 to 23. It has started to pick up, okay? Now we look at the cubic. High risk, high reward, right? If you see this, you will see 1.4% down the last hour, 0.6% down on the day, 12.6% down on the week, 13.2% down on the month, and 24.3% up on the year, sitting at the market cap of $250.20 million and a 24 hours volume traded at $4.23 million. That volume is also going from 1 million to 4.23. Okay, I'm trying to enter a trade on this thing, but I'm waiting. I think the RSI still looks a little bit suspicious, so let me wait a little bit on that. Anyways, now we go look at Jasmy, the Japanese Bitcoin. Okay, let's see what we got over there. 0.1% up the last hour, 1.3% up on the day, 0.1 down on the week, 14.1% down on the month, and 25.6% down on the year. I've been telling you, pay attention to that yearly number, okay? Sitting at the market cap of $698.03 million and a 24 hours volume traded at $22.48 million. That volume still low, so yeah, pay attention to that. Now let's go look at Jonathan's pet, the pet turtle Bitcoin. Let's see, for the last hour laying flat. That's why you see a lot of altcoins also going down in the hour. On the day, Bitcoin is up 2.6%, 1.5% up on the week, 5.2% down on the month, and 99.5% up on the year, sitting at the market cap of $2.27 trillion and a 24 hours volume traded at $49.67 billion. As you can see, that volume has also started to, rev up the engine a little bit. Okay, now let's go right quick. Let's go look at prices in details. Trading view, we see that here. What do we have? Dixie going down, good. Bitcoin going up, good. Now you see the inverse correlation, right? Now let's go look at prices in details. I told you, right? This is the this, my friend, this has become something else. Like, I know, guys, when it comes to TA, my TA is not that scientific. It's very simple, and I usually give you those wink moments, okay? Things like, hey, pay attention, because price always get attracted to moving average. Things like, look at that ribbon. It is still, hey, it is red, but it's curving. When it starts to curve, that means that thing is about to run. Look at that thing. Hey, by the time it turns green, it's going to be something else. And those of you who take those wink moments, you can make money with it, okay? I'm not a day trader, so yeah, it really don't matter to me the lower time frames. But for those of you who are saying like, yeah, I don't want to show you this, I don't want to show you that, but I'm telling you not to go pay people. I started doing this. I can't tell you specifically like, hey, get in now or get out, because I'm not a financial advisor. But I can tell you, hey, that is going to do, this is going to happen, this is happening right now, and it's up to you to make up your decision. But so far, look, I was telling you about this, okay? Way down, not even now, way below this ribbon turned to green. I was telling you like, hey, it is curving, it's about to turn green, and by the time it does, you are going to see this, okay? Because you can see it is pumping like hell. Even though with smart contracts, if you ask me my humble opinion, I think smart contracts are going to be between today and the 13th. Let's see, okay? I might be wrong about that, but I think something is brewing, because the amount of people buying millions and millions of Kaspa right now does not make any sense at all. But anyways, if you look on the 4-hourly, see, I told you, it happened on the 1 hour first, then it will go on the 4-hourly, then you are going to see it on the daily. You are going to see it. Right now on the 4-hourly, we are forming an inverse head and shoulders, if you can see. So if you look at this, you will see that first shoulder, the head, and the second shoulder. Now we broke it already. I would love this price to come back again and retest at that 8.2 cents or 8.1 thereabout and bounce from there. But one thing you are also seeing is that pay attention to the ribbon. It has started to like really squeeze. It hasn't turned green yet. It has already started to squeeze. Pay attention to it. By the time this thing turns green, this price will be long gone. And don't forget what I usually tell you, okay? Price always gets attracted to the moving average. That's what is going to happen. It's going to break above it. The 1 hourly has already broken. 4 hourly is going to follow. And then you're going to see the daily. When you look at it on the daily, look, daily has already started to spray. And by the time you start to spray out, it means sooner than later you're going to see this thing curve. And by the time you start to curve, price will be long gone by then. So those of you crying about price action right now, I don't know what to tell you. Kaspa is still on the same trajectory. Nothing has changed. First price going to be that 12 cents. That is very like stubborn to break. We're going to break that 12 cents. Then you do have 15 cents. After that, you have 18, 19 cents before we go to all-time high and then into price discovery. So yeah, if you want to sit over here and cry about it, man, I don't know what to tell you. That's exactly what I can say. I don't know what to tell you. Okay, now let's go look at our good friend Quant, QNT, the banker's coin, and the coin a lot of people love to hate. See, like I told you, this is the 1 hourly. It has started to curve. It has started to curve, and what do you see? Just like that. Still red, started to curve, but squeezing already. Just like I was telling you guys, you remember yesterday, we were going down, and I told you, price always get attracted to moving average. Look at that. Bam. Because you guys remember that candle that was going down yesterday, and I told you guys, yeah, it is suspicious to see how it got bought back right quick. But look at it. Got attracted, got rejected. Look at the ribbon. We are retesting it. This thing looks like it's going to start to go higher. Okay, it hasn't turned green yet, but it's getting there. Okay, when you look at it on the 4 hourly, you will see the same thing here. It has started to curve, right? It has started to curve. So this is, go look at the MACD, look at RSI, and you will even understand better what I'm talking about, because everything is just playing out perfect. Once Bitcoin take off, I told you this price action right here will mean nothing once Bitcoin takes off, and you're about to see Bitcoin is about to start going to that all-time high, 123,000, and watch Quant. Watch Quant, my friend. Quant is about to do something that most people are not expecting. Anyways, now, for me, price targets are still the same. Nothing has changed. It hasn't changed. $125 for that resistance. Break that, we do have $151, okay? After we break $151, we do have the 164. 164, then we start looking at 176. Between 176 to 230, there is not much resistance. And once we close a daily candle above 230, we will be looking at exactly $400 or above that, or all-time high, then into price discovery. That is what people are not paying attention to. But hey, don't say I didn't tell you. Don't say I didn't warn you and I didn't say anything. But hey, it's up to you. Whatever you want to stay on the sideline and cry about price, or you want to do something about it by putting your big boy's pants on. That's you. Now, I'm going to skip Jasmine because we haven't closed that 2.3 cents. I'm going to go straight to the total. Let's see. BTC. What is it? BTC USDT. Okay. I'm going to take this one. Just like I told you, right? Once we cross my green line, it's going to be a wink wink moment, and people did not try to see it, right? What do you see now? What do you see? Everybody who was calling for, oh, we're going back to $90,000. And I told you, it ain't going to happen, because rate cuts are coming. People are going to FOMO in. Things are going to happen, and you will see. Now, on the hourly, ribbon is green, and up we went, right? Look at the RSI, look at MACD, okay? On the 4-hourly. Now, even on the daily, when you look on the daily, look, what do you see? Let me zoom it in for you. You see? Ribbon is curving. It has not turned green yet. By the time this thing turned green, this price will be long gone. Long gone. You're talking about 120, 130 or close to it. You're about to see it. So yeah, wink wink moment. Like I said, this is what usually happens. You have all this macroeconomy that try to push the price in one way or another. And this is why I still believe that this cycle is different. Way different than everybody thinks. I have the 29. I'm going to watch the 29 to see what the hell is going to happen. Now, like I said many times here, the market does not go in favor of the majority. And if you can see right now, any YouTube channel you watch, anything you see, they're telling you it's going to be an extended market cycle. That's what they're telling you. Oh yeah, we're going to go into November, December 2025. Oh, some people are even saying we're going to go into 2026. Market makers, those little bastards, they always play the opposite. And that's why I'm telling you, man, I'm watching the market like a hawk. I'm watching it. There's no two ways about it, because, hey, I'm pretty sure a lot of people are going to get handed the hot potatoes. You're going to see. Okay? But anyway, that's up to you. It's not my money. I'm not your financial advisor anyways. I'm just telling you what I'm doing. Anyways, now let's go right quick. Let's go look at the markets. Let's go look at my positions, okay? But before we do that, again, like I usually say, please stay away from leverage trading if you don't know what you're doing. Okay? I know nobody is born with the experience. You need to get the experience first, okay? Before you start going into leverage trading, because if you don't, my friend, yeah, you're going to have your big mansion in Rec City, free of charge, all bill paid. That's what you're going to get. Okay, so yeah, if you want to gain the experience, you want to learn how to do it, because I cannot teach you how to trade. But if you want to learn, down below I do have Bydfi, okay, Phemex, Margex, and Wix Exchange. Sign up, follow those links and sign up. Meet their deposit requirements, guys. You need to meet it, because if you don't, you are not going to get the money. Once you meet the deposit requirements, they're going to give you free money. Wix Exchange is giving $30,000 now. It's the highest of all of them. You get the money, my friends, take only $20, $50, whatever you're going to get, little amount, and practice. Open trade, partial closing, total closing, adding stop losses, trailing stop, all that stuff. And then you add your little bit, what makes you feel better. Because like I say, everybody has their own way. I trade at 50x with no stop loss. That's the way I trade. You cannot do that if you don't know what you're doing. Okay, so please, you have to be careful. Be careful. All right, but anyways, now let's go right quick. Let's look at my positions. Now we're going to start first with my Bydfi. Okay, Bydfi, as you guys can see there, I am trading King Kaspa, and I am also trading the Japan, King Kaspa and Quant. Sorry. So as you can see, look at the graph. You see my graph? It has started to go up, right? But my overall today sits at $10,800 approximately. And if you look at my contracts, you will see that here. Wow, Kaspa is up 8.2 cents. You will see that here, my Kaspa, yeah, I'm still down, but it's beginning to show movement. So I'm sitting at 57% down, which is $5,100 approximately. It looks better than it was the other day. It was like $5,500 or something like that. On my quant, yep, I'm still down 7%, which is $730 approximately, as you guys can see. Okay, so yeah, nothing has changed, because the market has started to move. By the time this thing gets on full scale, you will see these positions. Okay, now let's go to the next one, Phemex. On Phemex, you guys already know I am trading King Kaspa and the Japanese Bitcoin. As you guys can see here, my overall, yeah, it went up from yesterday. Yesterday, I think I was down 7,200, if I'm not correct. But today, I am up $7,600 approximately, okay? If you look at my contracts, you will see that here, let's see. On my Kaspa, yeah, it went up a little bit, 9% down, which is $420, $416 approximately down, okay? And if you look at my Jasmine, yeah, still holding steady, 74% down, better than it was the other day, 78, but today 74%, which is $8,100 approximately. That's where we are right now. Now, if you look at last but not the least, we can also see week's exchange. Here I am trading King Kaspa and I am also trading Quant. Okay, as you guys can see, let's refresh this. Yesterday I was down $4,000 or 3,900, something like that. Today I am up 4,256. I'm telling you, that last leg is about to take place. And as you can see, like I showed you yesterday, look at that. That's the graph. That tells you I'm a long-term trader. No matter short-term prices don't affect me. As you guys can see, the staircases that we are creating, and this thing is taking the places like I thought. I told you it's gonna go up, and once it go, yeah, we do our thing. Now, if you look at the contracts, you will see that here on my Quant, I am up $778 approximately, which is not bad. And on my Kaspa, I am up $55. Yeah, it looks like it just broke even. If you want to, again, you can pause it and you can look at my numbers if that's what you wish to do. And I also made it how you call it, a habit. Like I'm trying to teach my kid. Okay, I told you guys I'm teaching my kid how to invest from a young age. He's just 9 years old. Hopefully he can do way better than me when he's my age. Okay, so yeah, I'm teaching my kid, and I open an Acorn account with him, so to show him every day. I make him look at it, and he tells me, like, or I make an exercise with him talking about what can be done better or what cannot be done. Look at some kind of stocks. We make it like a fun game. We make it a fun game, like, hey, look at the stocks, what do you think, or what is going on? And you guys can see yesterday we were sitting at what, 150 or something like that it was. Today, look at his investment account, $183. I am so proud of my boy. He's not even funny. I am so I am so proud of my son right now. At his age, 9 years old, he has begun to learn how to do this. That is why I'm so proud of him. So if you look at, let's see what he got going on. Look at that staircase. My boy is going. My boy is going. I like where this is going. I mean, like, I am so happy with him, the way he is doing it, and he's taking it serious, as you guys can see. And then look at that, all-time high, 1.9%, almost 2% up on his portfolio. And this is stock trading; it's not crypto. This is, wow, he's doing good. I like it. I like that. And the stocks that he's trading, like I showed you guys, the VOO, that is the S&P 500. That is wow. IJH, $10 on it. IJR, $5. Oh, he increased the IXUS, increased $44 to it. Well, that is nice. And now I'll have to ask him, what the hell, why did he do that move? But anyways, you see here on the bonds, you only have ISTB and AGG, which is, yeah, I'm proud of my boy. He's doing something. He's learning. Right now it might not seem much. I try to, for him to be able to catch on, I try to make it like a game. Like, hey, look at this, look at that. It's like a little game we play, and then we'll see. Plus on top, I make him like, you know what? If you can end up your allowance cycle with 30% of more than you got, I am going to pay you for it. I give him incentives for saving his money. So yeah, those are things that I do. But anyways, everybody's different. My parenting skills might not work for you. But that's for me. I just want to make sure my boy knows exactly where we are heading to, where this world is heading to, and he will be much more prepared than I was when I was his age. Okay, anyways guys, thank you so much for watching my videos. Please don't forget to subscribe. I am trying to make it to 5,000 subscribers. Okay, don't forget to like and comment. I am very interested in knowing what you think about everything that you see that we talked about today. Okay, and also don't forget to share so that other millionaire-minded attitude like you and yours truly, we all can see these videos and the family can grow. Like I always say, you never know what you're going to learn from strangers. Okay, so please, I'll keep blocking them furthers out. anyways guys, until I see you in my next one, please take very good care of yourselves. Okay, bye.